All right. Hey, everyone. Welcome to our webinar for today. Okay, let me just check if everything is working. Okay. Hey, Elena. Hey, Franklin. Hey, Harina. Hey, Jacob. Hey, Rich. Tony. Hey, morning. Morning. What time is it there for you guys? Hey, Jessica, Joash, Bob. 8 a.m. Oh, wow. Do I want to know which part? I'm guessing you guys are in Europe. Europe, I'm assuming. Yes. Okay. So Elena's from UK. Okay, we've got a lot of UK. We've got an Australian. Wow, really early, man. Up and early for webinars. Up and early to learn. Good for you. Okay, if since you guys woke up so early, or do you usually wake up so early, or is it just for the webinar? Nice. Yes. Okay. That's really early. Usually at 6 a.m. Okay. Wow. Wow. That's fairly early. Okay. It's 4 p.m. here in Singapore. Okay, so yeah, you're in bed early and you wake up early. That would make sense. I'm in bed about 2 a.m. so I wake up at like 9 most of the time. Okay, so it's 4 p.m. here in Singapore. I'm glad that we've got so many people from around the world joining us today. I see a lot of familiar names. Tony, I think you were in my webinar yesterday. Harena, Elena, uh, Franklin, Josh, Joash. It's nice to see you guys again. I'm glad you guys are back to learn. Okay, we're gonna wait like maybe one more minute to let more people join. I do see more people joining. I see new names. We'll just give them a minute to join. Okay. Okay, welcome everyone. Just gonna start now. Okay, as usual, for those who are always attending our webinars, you know how this rolls. We always start with a disclaimer because we want you guys to trade carefully and be safe. Okay, we don't want you guys to be blowing your account. So as usual, I like to start off by saying that anything that's shared in this webinar is just mostly my opinion and my way of trading. Ultimately, you guys should be trading at your own risk. Trading FX or CFDs carries significant risk and is not suitable for all investors. Trading, especially on margin, is very risky. So do please trade with caution. Please do not jump into the ocean without first learning how to swim. Okay, so I'm guessing that's why you guys are here in this webinar. Oh, actually, one thing I like to find out is how long have you guys been trading for? I know I see familiar names here, and some of you have been trading for 6 months. I remember 1 year. I think Brian was saying he was trading for 1 year the last time. What about the rest of you? How long have you guys been trading for? Okay, I've got someone saying 3 months. Hey, Yubaraj, welcome back. 3 months, a year. Oh yeah, Tony, I remember it was Tony that was saying he was a year. Still on trading, demo only. Okay, Jacob, you are in the right place. We do want you to learn before taking any trades. Yep, we do want you to learn before taking any trades. We don't want you to jump into the ocean before doing anything. Hey, Baraj, welcome, welcome. Nice seeing you again. Okay, so without further ado, let's start. So today is gonna be trade and what is this doing this? Okay, trade and risk management. It's actually part 2 of the trade management series that we have going on. I know on the website it said something else, but we're doing part 2 today of trade management. So our agenda for today would be meeting the team, which is my team that's taking care of you, who's doing all these educational webinars. Anatomy of a trade, which we did yesterday. We're going to cover partial profits today, and how many partial profits do you need? And then we're going to move on to when do you break even. Okay, so I see some of you saying that you've been trading for more than a year. So I don't know if you are already familiar with things like this topic, but one thing is good, it's always good to refresh your memories anyway. So every time I give this webinars, it's also refreshing my memory, which is actually affirming like the practice that I already do and like my basics. So it's good that you guys are here. Okay, let's start by introducing the team. We are from Everest Fortune Group. We're an award-winning research team. We've won a few awards and are also the finalists for Best Forex and Best Equity Research for Technical Analysts for 2019 and 2022. Okay, so we provide research to institutions, brokerages, retail people, and we do appearances on radio talk shows. Like what we're doing right now for Vantage, we're doing the webinars for them, we're doing the educational webinars, and yeah, that's what we're good at. Our team comprises of Desmond, which is the CEO, Kaylin. I'm sure most of you actually would have attended her webinars, because a lot of you who attend my webinars attend hers as well. Kaylin and Angelina, and then there's myself. So a little bit about myself so that you guys know that you're in good hands. I am a profitable trader. I'm managing close to, actually it's $500,000 now. I've passed FTMO twice. So FTMO requires me to do 10% profit a month. I've passed that twice. I specialize in reversal. So I hope for those who are here up and early, like 8 a.m. for some of you, I hope those that are here that took the time to join this webinar. I hope you gain something out of this. I hope I can be able to share my reversal techniques with you guys. My record for trading has been, I think the best I've done is 10% in a week, and I did that by using reversals. Actually, like consistently, I do like at least 5% a week, most weeks, and I use a lot of reversals to catch those winning trades, and I hope you guys are able to learn that from me and apply that in your own trading, because ultimately we just want you to be profitable, right? I'm sure that's why you guys are here as well. Okay, so let's start. So today's webinar, I'm going to be using a lot of the live charts instead of slides, because I think that this way it's more, you guys learn better this way. You will be able to find the setups as well, and then we can apply what we are trying to learn today. So today we're gonna do sorry, what happened to my, oh, okay, yeah. So we're gonna start with anatomy of a trade. We did that yesterday already, for those who attended my webinar yesterday. In a trade, you want to have an entry, stop loss, and take profit. And then today we're going to cover break even and partial profit. So this is the two that we're going to cover today. Sorry, not that one. How do I erase that? We're going to cover break even and we're going to cover partial profit today. And then the next webinar, we're going to cover trailing stop and idea and validation. Okay, so today we're just going to do break even and partial profits. And we're gonna head straight to the live charts. Before I head over to the live charts, do you guys have any questions? I'm gonna maybe leave 5 minutes, give you guys 5 minutes to ask any questions, especially those who attended the webinar yesterday. Maybe you have some questions from yesterday. Hey Eugene, welcome back. Hey Nikita, if you guys have questions, you guys can ask me now before we move on to the live charts, because it might get confusing for some of you, especially seeing that some of you are still training and have not ever traded live before. But I mean, going on demo is good as well. No? Okay, I think everyone's good. We're gonna move on to the live charts then. Oh, what's going on? Why can't I seem to exit? Okay. Okay, we're on the live charts. This is trading view. Can you guys just let me know in the chat box if you guys can see my charts? Yep. Okay. Thanks, Rich. Thanks, Joash. Thanks, Jessica. Thanks, Jakub. Thanks, Arena. Okay, I'm glad you guys can see my charts. So before I start, do you guys have any pairs you want to look at or any instruments you want to look at? Because what we're going to do is now I think to kill two birds with one stone, we're going to first look for a setup. And then from the setup, we're going to see how we can apply the break-even strategy and the partial profit strategy. But to apply that, we first need to find a setup, okay? So what can be the next predictable move on GBPJPY? Nikita is asking. So let's go over to GBPJPY. Oh, someone has been plotting on this. Okay, so what I like to do is remove drawings and indicators. I'm going to remove all of that so that it's nice and clean and we can work without like biasness of any like indicator or whatnot. So one look, can you guys tell me if you guys see an uptrend or a downtrend? Do you guys see an uptrend or downtrend? Can you guys just let me know? Okay, so someone is, I see a few replies saying downtrend, downtrend, uptrend. Okay, so I'm just gonna go with most of your requests. Are you guys swing traders or day traders? Because you being a swing trader or day trader depends on the time frame we look at. So day trading is trading within the day, means you get in the trade today, you get out by today within 24 hours. If you guys are swing trader, that means you hold your trade more than a day. That means you look at the bigger time frame. So right now, personally, I am a day trader, so I look at the 4 hours and the 1 hour, but I want to know what you guys do most of the time so that we can try to cater to your strategy, because ultimately these webinars are for you guys to learn and be profitable. Okay, we've got mixed, a lot of mixed, mainly day trading, both. Okay, I see a lot of both, a lot of answers saying both. Okay. Okay, since it looks like it's anonymous, so it's unanimous. Let's just look at day trading then. So with day trading, I always start with the 4 hours to try to look at the trend. Okay, yeah, so most of you here are either both or day traders. So I'll look at the 4 hours to try to look at the overall trend. I do see a downtrend. Like I do see some of you saying it's a downtrend. It is a slight downtrend. There is a trend line here. And I also see an uptrend. Okay, the uptrend is not as valid as the downtrend, but I do see some kind of upward movement as well. So since the uptrend is not as valid, because to draw a valid trend line, you need 3 touches. So that's 1, 2, and 3. But for the uptrend, you only see 1 and 2. So we're going to get rid of that up ascending trend line, and we're going to just leave the descending trend line because it's valid. Okay, so once we found our trend, we can now move on to the smaller time frame, which is the 1 hour. Okay, we move on to the 1 hour. And then now we try to look for support and resistance. Okay, so the easiest way to find support and resistance is to look for the swing high and the swing low. So I see a swing high here. I see a support here. The swing high is the resistance and this is the support. I do see an intermediate support here, right? I don't know if you guys see that. Okay, I see a better support here. Okay, so why we need to identify the support and resistance is because we need to narrow down where we think price is going to move to. So right now we find our support and resistance. We are biased that price is going to move within this range, right? Like what whether the first support or the second support, but we're biased that it's going to move within this range. Okay, so let's change this to first resistance, and let's change this to first support and second support so that we're clear with our lines. Okay, so now that we've got our lines, first support and second support and our first resistance, we can now kind of narrow down where price is moving to, and we kind of establish that price is on a downtrend. So I'm more biased to look for a sell. I mean, the best place to get in for a sell entry would be here at the trend line, because we're expecting price to go to the trend line and reverse back, right? That's the most ideal, but it's nowhere near the trend line right now. It's close to the trend line, but not really. So we'll just work with what we have just to find a setup. Okay, so now that we've identified our support and resistance, we now need to identify the strength of the support and resistance. The reason why we identify strength of support and resistance is to know when price comes to the resistance, is it going to reverse or is it going to do a breakout, right? That's why we identify support and resistance, okay? Because if we identify that this is strong, that means we're going to enter here for a sell because we're expecting price to reverse. If we think this is a weak resistance, that means price is going to break out and we can enter here for a buy, right? I hope that makes sense. Is that clear thus far, or is that like, can you guys grab the concept of why support and resistance is so important? Are we good? Okay, I'm glad you guys got it. Okay, now that we've identified support resistance, let's try to look for some Fibonacci lines to see if anything lines up at those support and resistance or close to the support and resistance. So when support and resistance lines up nicely with Fibonacci levels, it means it kind of like confirms that, okay, yes, this is a significant level and we should take note when price reaches this level. There's a chance that price might reverse from here. Okay, so we're gonna look for a retracement from here, from the swing low to the swing high. Oh, I am using Fibonacci. Can you guys just let me know in the chat box how familiar you guys are with Fibonacci, like 1 being not really and 10 being like you're pro with Fibonacci, so that I know if I should be explaining it to you guys or if I should just, if you guys are okay with me just going on with the Fibonacci. Okay. Eugene is saying 1. We've got some saying 2, 3, 5. So I guess you guys know of Fibonacci, but you're not very well versed with it. Fibonacci is a very important tool in trading. It's a tool that you use to find support and resistance, like I was saying. So, okay, when you're looking for Fibonacci levels, there's 4 kind of patterns. I'm just gonna roughly go through this so that you guys can follow me. There's 4 patterns. One is the retracement. It looks like a V, but the end is shorter. The back end is shorter. We've got the extension. We've got the expansion and, sorry, expansions like this. And we've got the projection. Okay, so when we look at the charts, we want to identify these 4 patterns on the charts. So I'll give you an example of a Fibonacci retracement. This is one example. Do you see this is the first one, right? This is 1, 2, 3, and 4. Okay, so I do see a Fibonacci retracement here. I hope you guys see it too. So this has a lot to do with chart patterns. I think in job as a trader, a lot of it also has to do with being able to identify these patterns. It will assist you guys a lot if you are able to identify these patterns. Okay, I think it really would assist you guys a lot. Okay, so when we find a retracement, a Fibonacci retracement consists of 5 levels. Okay, let me give you an example. Let me get rid of this. Oh, by the way, the retracement can work the other way. So this is a retracement. This is also a retracement. As long as the end behind is shorter than the one in front, that is called a retracement. If it is longer than the one in front, it's called an extension. Okay, like its name, it is an extension of what price is. Okay, so right now price is retracing. Okay, so I'll show you guys how to use the retracement tool. You get the Fib retracement, you pull it down. There's gonna be 5 levels. There's gonna be the 23.6, 38.2, 50%, 61.8, and the 78.6%. Okay, these are the 5 levels. So that means that when price is here, it's doing a reversal now, right? It's doing a reversal, aka known as a retracement. It's retracing. You just don't know when is it going to retrace to. Is it going to retrace to this level, this level, this level, this level, or this level? You don't know. But having the Fibonacci retracement kind of gives you a rough idea of where price is going to retrace to. Okay, I hope that makes sense. So right now, to identify the strength of the resistance and support, you want to find levels that align with the first resistance and first support so that you know the strength of that first resistance and first support. Okay, so I'm going to use a Fibonacci projection, which is number 4, because I do see it here. Do you guys see it? That kind of like N pattern. Do you see the N pattern? I mean, by right, I should be using this low here. But I do see that there is a support here. So I'm going to use this low instead. And I will see that N pattern, which is number 4, which is called a Fibonacci projection. Okay, so I'm going to pull this. I'm going to look for a Fibonacci projection level. Fibonacci projection level is any level above 61.8. Okay, so the Fibonacci level, the 100 level, actually lines up nicely with our first resistance. So our first resistance and support is actually a zone. It's not one line. So the Fibonacci 100% projection lines up closely to the first resistance. It kind of gives me a rough idea that this is a zone of resistance, and when price actually gets here, it will have to break. Let me get up my brush. It will need to break this resistance before it can go up to the upside, right? So that we have identified a strong resistance here. Okay, before I continue, I just want to know if you guys can follow what I'm trying to say. If you guys are okay, can I get a yes in the chat box? Okay, I'm glad, because I don't want to keep going and you guys don't understand. Most importantly, you guys need to understand so that it will help your trading. Because ultimately, I really want you guys to be profitable in trading. I want you guys to grow your account. Okay, I'm glad that you guys are following. Okay, thank you, Nikita. Thank you, Harana, Eugene, Rich, Jacob, Joash, Josh, Bob. I'm glad you guys are following. Okay, so now that we have identified a resistant area here, so I mean, logically, if you think about it, even with life, with anything, if you reach a place and you see a door, and the door, you have to push a door, let's say it's a really heavy door to get to the other room, that is a form of resistance, right? So right now the question is price going to break this resistant area? We don't know, but most of the time what price does, it reverses from resistant area, because there is a resistance, right? If there was no resistance here, then I'm biased that price is just going to shoot up, but there is a resistance there. So I am biased that price is going to reverse from here, especially since there is a Fibonacci level here as well that lines up nicely with that first resistance. Okay, so if that is my bias, I mean, price can go either way, guys. Right now, we don't know if price is gonna go up or it's gonna go down, because it's kind of in the middle. You just need to know when price does move up and it does move down. These are your 2 key levels that you want to take note of. These are your 2 key levels, and that means that when price reaches one of this level, chances are it's going to reverse. I'm sorry, I don't know why my mouse is doing that. Why are you doing this, mouse? Okay, but since price is closer to that first resistance area, I'm more biased that it's gonna reach here and then do a reversal from here. Okay, so now that we have identified where we think price is gonna reverse off, we now need to find confluences. So confluences is just things that are supporting your argument. So right now my argument is that if price reaches the first resistance, I think it's gonna reverse from there. If it reaches the first support, I think it's gonna reverse from there. Okay, so that's my argument. So right now what I need to do is look for things to support my argument. So things that you should use is indicators, Fibonacci levels, trend, whatever it is to support your argument. Okay, if price broke through the resistance, would you wait for a retest of the level to buy? Yes, Rich, that is a very, very good question. I would wait for a retest for price to buy. So Rich is asking if price were to break here, price going up, do I wait for price to come back down here before I enter here for a buy? Yes, I would wait for the retest. Usually a safer bet is to wait for the retest, but I know like more aggressive traders would just take the trade, like the minute it breaks, they will enter for a buy from there. Okay, I want to tell you guys one thing that you guys should keep in mind. If you guys practice proper risk management and you take high probability trades, you can take a very small account. I'll give you an example. You can take $1,000 account and you can turn that $1,000 to 100,000. Okay, because you think about it, you're taking really high probability trades, like trades that are bound to hit your take profit, versus taking a lot of trades that may or may not hit your take profit. Okay, if you don't take high probability trades, I can give you $100,000 account and it's just gonna go to $1,000 because you're not practicing proper risk management, you're not taking high probability trades. So what you want to do is increase your winning rate. So what Rich is asking is a really good question. So when price breaks here and it does a retest here, I'm sorry, why is this mouse doing this? Okay, it does a retest here. A safer bet is to enter here for the buy instead of entering here for the buy, because entering here for the buy could be a fake out. If you guys, for those who are beginners here, I hope you guys know what a fake out is. A fake out is when price just breaks a little and then just comes back down. So it kind of tricks you. It's like, oh, I broke out. Oh, no, wait, I tricked you. I'm not breaking out. I'm actually turning back. Okay, so the best bet is to wait for price to do a real breakout and then retest and then go up. And that increases your probability of a win, because trading is, at the end of the day, trading is really just probability. It's just increasing your chances of winning. Like, do I have a 50% of winning this trade? Do I have a 80% of winning this trade, or whatever it is? What you want to do is increase your probability and chances of winning the trade, right? So right now, we've already got our bias. Our bias is that when price reaches one of this level, it's going to reverse. Now we need to find indicators to back up our argument, okay, to increase our probability of winning, okay? So let's add indicators. I use Ichimoku cloud a lot. I know I see a lot of familiar names here, and I know some of you have attended my Ichimoku webinar. So I see Ichimoku here. Right now, price is above the Ichimoku cloud. So you guys see this cloud? I'm just gonna remove everything so it's clearer for those who are new here. You see this cloud? It's very simple. If price is above this cloud, it's indicating that price is bullish. If price is below the cloud, it's indicating that it's bearish. Right now, it's above the cloud, right? I'll give you a really good example. You see price crossing the cloud here to the upside. It used to be below the cloud, and then now it's above the cloud. And what did price do? It just shot up. Similarly, before that, price cut below the cloud and it just shot down. Okay, so Ichimoku cloud is a very good indication of where price is going. So people usually take note, well, me at least as a trader, when price just broke the cloud to the other side. That's one place that I want to take note of. Okay, so as you can see, we're really lucky actually. Price just broke the cloud, and what you're hoping from here that is that price shoots up. Okay, that's what I'm hoping. Hey Yubaraj, so I usually look at the 4 hours and then the 1 hour because I'm a day trader. But if you are a swing trader, you can look at anything above the 4 hours, the daily or the weekly, depending on how long you want to hold your trade. But like I'm in and out within the day because I don't know about you guys, but when I enter a trade, I cannot sleep at night. Like I will keep waking up to look at the trade. That has a lot to do with trading psychology as well. I keep wondering if, oh, has the trade hit my take profit? Has it hit my stop loss? Can I review the trade already? So I don't like that. I like to get in and out within the day. If you guys are like me, you should consider day trading as well. I know a lot of people are like me. Yeah, so I do day trading for that reason, that I don't want to have any trades overnight. I want to go to bed knowing that I close out all my position and I'm safe for the day. Okay, I mean, even if you have a stop loss, it wouldn't matter. Okay, so now that price is above the Ichimoku cloud, I'm biased that price is upwards, it's going upwards. So now I'm gonna find a better entry. So you guys see that I moved this first, I put this first support here, right? But because of the wicks on the candles, you can actually move your entry based on the wicks of the candles. So I can actually move this a bit higher to somewhere, yeah, maybe somewhere closer to the body of the candle instead of the wicks. Okay, so right now I'm biased that price is gonna go up because it's above the Ichimoku cloud. So what I want to do now is wait for a buy entry. Okay, now that the Ichimoku is signaling me that it's more to a buy. On top of that, there is a short-term, there is a uptrend. So I'm more biased that it is going to continue on an uptrend, right? Okay, so what you're doing is I just kind of like gathering evidence to like back up your bias when you're looking for a trade. Okay, so right now price is in the middle. What I want to do is wait for price to come back to this first support level, and then I can enter for a buy here. Okay, do you see that? Do you see first support level, and then I can enter for a buy? Okay, so right now, because that's my bias, I'm gonna change this. I'm gonna put this as buy entry. Okay, so that if price comes back here, if price comes back to this first support, the next thing we're gonna do is wait for a reversal candle. Wait for a reversal candle. For those who did not attend my webinar, reversal candle, you can just Google what reversal candles are. A reversal candle is like hammer, inverted hammer, hanging man, shooting star. These are reversal candles. Okay, so when price reaches this buy entry, you want to wait for a reversal candle, because that reversal candle is signaling to you that, okay, I was on a downtrend, I was coming down, now I'm ready to reverse and come back up. Okay, and go back up. Okay, so you want to wait for price to come back to the buy entry and then wait for the reversal candle. I know, can you look for a trade that has an entry now? Okay, Joash, here's one thing I want to show you. Trading is 10% buying, 10% selling, and let me find you that quote. Trading is 10% buying, 10% selling, and 80% of the time it's waiting. Waiting for price to go to your entry, waiting for price to do what's supposed to do. Okay, so right now there is no entry. I do not see an entry right now. Actually, there might be an entry right now. I do see a resistance here. Sorry, I do see a resistance here. But the best entry for me, there is a weak level there. It is now where it is now, and it it has come down to it. Okay, hey Michael. Yep, I do see a support here. I do see a support here. This is one support you can take note of, but looking at how candle the price action, I don't know if this can be an entry. We can just put this as possible entry number one, and this is possible entry number 2. Honestly, for me, I think the best entry is here, because that is exactly where the support lines up with the Ichimoku support as well. So that, to me, that signifies that that is a stronger support level. I mean, there is this second one is also a strong support level, because it's 1, 2, 3, 4. There's like so much reaction on this level. You see all these touches here? That is it is showing us that every time price came to this level, it reversed. It came to this level, it reversed. Okay, broke to this level, it came to this level again, it reversed. It's at this level again, it reversed. It's now at this level again. Is it gonna reverse now? We don't know. We need time to tell us that. Okay, so right now we're at a support. Depending on how this candle closes, right? Depending on how this candle closes, you might be able to enter for a buy entry. So yeah, good catch, Michael. Good catch. If this candle closes with some kind of reversal pattern candlestick, I think you guys are okay for a buy here. Okay. Okay. So you can either enter for a buy here, or you can enter here. That's entirely up to you and how, like, I mean, personally, I would prefer entering at this first one, but price might just reverse from here. Okay. Time frames you look at for candlesticks. I just look at the candlesticks on the time frame I'm already looking at. Like, so if I'm looking for an entry for 1 hour, I'll just look at the candle structure on the 1 hour. I don't go down to a small time frame to look at the candlestick structure. I just stick to this time frame. Okay, so let's say price closes here. Let's say price closes here with a reversal candlestick, which is signifying that you're good for an entry for a buy. That would be your entry. Okay, like, let's say. Okay, so now we need to find our stop loss. We need to find our stop loss. We'll just put our stop loss at this support here. We can put our stop loss at this support here. Or if you want slightly lower, what I usually do is put it slightly lower, because I do not want to get wicked out. But okay, I'll just, for the purpose of our webinar topic, which is to break even and to take partial profits, we'll just put that there. Okay, and then the take profit would be to the next first resistance. Okay, because we are expecting price to go to the first resistance. So what price usually does, price is very attracted to support and resistance, and very attracted to key levels. Okay, price is very attracted to key levels. That means from here, I'm expecting price to go back to the next key level, which is the first resistance. Okay, so now that we've identified our entry, we've identified our take profit, we've identified our stop loss. Let's go back to our topic for today, which is to break even and take partial profit. Okay, so to take partial profit, we need to identify more take profit areas. Okay, so we have found our first take profit area. This is our first take profit, right? Now we need to find our second take profit. So our second take profit is just the next zone, the next resistance. So this is the first resistance that we found. Let's find the next resistance. Do you guys see that's a swing high here, which lines up with an overlap? Okay, that's another resistance. There's another one right here. So I'm going to change that to first resistance. I'm going to change this to second resistance. Okay, I hope this is not too confusing for you guys. Okay. Oh, I don't know what happened there. Okay. Let's say price right now closes with a reversal pattern. You're entering here for a buy. Price is, you're entering here for a buy. It goes to your take profit. Okay. It goes to your take profit. What do you do now? So for the purpose of our webinar, which is partial profit, what you can do now is, if you're entering for a 10 lot size, what you can do now, if you want to play it even longer, you want to play the trade even longer, you want to play it to the first resistance, you're hoping that price goes to the first resistance and even the second resistance where the trend line is. Now you enter with 10 lots. What you can do is take profit for 5 lots and leave another 5 lots running. Okay, that way you secure half your take profit. So even if from here it goes to your take profit, right? Even if from here it reverses and it goes back down to your entry, even goes back down to your stop loss. Even if it goes back to your stop loss, at least you have secured half the take profit. Okay, is that clear? Do you guys get have you guys got that? Okay, got it. Thanks Eugene, thanks Michael. Okay, I'm glad that you guys got that. Okay, thanks Joash and Jessica. So that's one way to do partial profits. Thanks Nikita. Okay, you've gotten partial profits, so that's how you do partial profits. So let's say price is really going in your favor. From here it breaks and it goes to your second resistance, right? The second resistance, which is your second take profit. So now you have left with 5 lot size. You want to take more profit, so you want to take 3, like maybe take half of it, so maybe take 2.5 lot size, and you have still 2.5 lot size running. So in total you have taken 7.5 lots worth of profit. So no matter what happens here, you are at least, you have taken some of the gains. You know what I mean? You have taken some of the gains. You didn't write the whole thing all the way, but at least along the way you have taken profit. Because why we take profit along the way? Because we are afraid that sometimes price may reverse. Sometimes price may reverse, and it might even reverse all the way to your stop loss, right? Okay, so you take more profit and it secures your win for the day. Okay, so now for our topic, which is break even, now that we know how to use the partial profit strategy, for the break even, sorry, let me just close this tab. Okay. Okay, to break even. Okay, so now that price, let me just get rid of this so that you guys can, it's clearer. Okay, price has gone to your first take profit, that's no problem. From your first take profit, it goes to your second take profit. So now price is right here. You've taken 7.5 lots, or 75% of your initial capital, your initial lot size. You have 2.5% more. Now, what you can do is move your stop loss to your buy entry. Okay, move your stop loss to your buy entry. So no matter what happens, let's say a price decides to reverse from here, it reverses and goes back to your buy entry, right? It reverses to your buy entry, it stops you out, you get stopped out, right? At least you don't lose anything, and then your trade becomes risk free. Okay, does that make sense? Does that make sense? Okay, thank you guys. So that's how you use the break-even strategy, and that's how you use the partial profit strategy. So what even more longer-term traders who could you repeat one time? Yeah, sure, I can repeat. Can I just find out which part you are lost? Which part you're not very clear with? I'll repeat that part. Or do you want me to start with the whole scenario again? Okay, I'll just quickly start with the whole scenario again, okay? Okay. Right now, the first thing you want to do as a trader is find your setup. Okay, so we have already found our setup. Our setup consists of an entry. It consists of a take profit. Oh, okay, and a stop loss. So let's say from here you enter a buy with 10 lots. Okay, it really moves in your favor and it goes to your take profit. Okay, so you're now at your take profit, but you don't want to take all the profit because you're hoping that it goes even higher or even higher to the trend line, right? So now at 10 lots, entering at 10 lots, at the first take profit, you know what? I think I should change the name of this so that it's much clearer. Take profit 1. Okay, take profit, where is it? Take profit 2. And take profit 3. Okay. Oh, sorry. This is supposed to be green. Okay. So you're hoping that price goes further, but you kind of don't want to risk so much because you think about it. If from here price decides to turn back and goes to your stop loss, you're losing the amount of money for the whole 10 lots, right? But if you take profit, you take partial profit, you kind of secure some of the wins, and also it kind of reduces your risk when you lose. It reduces your risk when if price decides to make a U-turn and turn back to your stop loss, you don't lose as much as the whole 10 lots. You lose only like 7, like whatever is left. Okay. So when price reaches your take profit 1, what you can do is take partial profit. Usually what I do is if I'm happy, I take half. So I take 5, like 50%. So I'm left with 5 lots. Okay. So now you have the profits for 5 lots. So I'll give you an example. Let's say you enter here and by the time you reach your take profit 1, you're $1,000 in profit. You don't want to take the whole lot size because you're hoping it goes to take profit 2. So what you do is you secure $500 worth of profit. Instead of taking the full $1,000, you take $500 worth of profit. Okay, and then you let the rest of the trade to continue running, hoping that it goes to your take profit 2. Okay, so here you take half the profit, and now it really does continue. It continues up to your next take profit. And from here, what you can do is your first option, because you have broken this resistance. So if you guys know, I'm sure a lot of you would know that, because I am sure most of you are experienced here with this. When price breaks a resistance, that resistance ends up becoming a support. Okay. So when price breaks this resistance, if price is able to go beyond this first take profit, it means that this first take profit is now your support. And that means price will have a hard time breaking the support now. That means when price comes back here, it's more likely to reverse up. Okay. That's just one sorry, I can't think of the word right now. One trading rule or bias that's always happening. When price manages to break your resistance, that resistance ends up becoming a support. So that means if price is really on its way to your second profit, or it really reaches your second profit, now your take profit is now a support. It's now a support. What you can do now to secure or mitigate your risk or minimize your risk in that trade is to take your stop loss and move it to where you enter the trade. Okay, move your stop loss to where you enter the trade to break even. That means if price somehow turns back and manages to break this support and come back down to your entry, at least if you get stopped out, you don't lose anything. Okay, you only break even. So that trade was just zero you don't lose anything. Okay, another thing you can do is move your stop loss to entry, and then at take profit 2, take some more profit, take partial profit. Okay, so right now, if it does really reach take profit 2, that means your gains wouldn't be 500 anymore. It will be like maybe 700. So from this 700, you can take $350 profit, and then let the rest of the trade to continue to run, and then hope that it goes to take profit 3. So when it reaches take profit 3, or if it reaches take profit 3, you can now move that same stop loss to your first support. Okay, you can move your stop loss to the first support to continue playing it up. But if you think it's not going to move up anymore, you think, okay, this resistance, there's nowhere price is going to break this resistance, price is definitely going to turn back from here, that's when you take your full profit in that third take profit. Okay, does that make sense? Can you guys follow? Okay, thanks. I'm glad you guys are following. Okay, I hope that was clear, because this is one strategy that is useful for traders who want to mitigate risk. This is a very good technique to mitigate risk and to like kind of save your account. So one thing you do not want to do with trading, it is actually also very demoralizing. I'm sorry. Demoralizing is when you get a margin call, or if you see your account losing and you see your let's say $1,000 account shrinking down to 500. What you want to do is always secure your account, because if you don't even have an account, how are you going to grow it, right? I can grow $1,000 account dollars to 100,000, but I need to first be able to secure and protect that account. So this is one way to protect your account. Okay, so if at any time it does turn back and hit your stop loss, at least you don't lose anything if it's at break even, right? So I think the moral of the story here is that the most riskiest part of any trade is the initial stage. The initial entry is the most risky, because if you think about it, your stop loss is right here, right? If this is your entry, this is your buy entry. Okay, I can't remember where our entry was. Okay, let's say the entry was here. You enter here for an entry and you're just totally wrong. It just doesn't go your way at all, right? It doesn't go your way at all. Then it goes this way. That's the most riskiest part, that you get stopped out immediately. You immediately lose money. But then again, if you're practicing proper risk management, it should only be 1% of your account size. That means if you have a $100,000 account, you should only be risking $1,000. And from my webinar yesterday, I already explained to you that if you use a $1,000 account size, okay, wait, was it yesterday or last week? I'm sorry, I did too many webinars. I'm sorry, I don't remember. But I did explain to you guys that even just risking $1,000, you can still grow your account tremendously, because you can be risking 1%, but your take profit can be 10%. Okay, that's just looking for very good setups and using proper risk to reward ratios, finding very good risk to reward ratios. Okay, so the riskiest part about entering a trade is always the initial part. Once the trade is going your way, you now have the options to reduce your risk by moving your stop loss closer and closer to your entry, and eventually above your entry. So when it is above your entry, price can just come back to your stop loss and you would still be closing in profit. Okay, I hope that makes sense. So yeah, that is our topic for today. I hope you guys managed to grasp the concept of break even and partial profit. This too is basically to secure your wins. It's not a very aggressive technique. There are people who refuse to take profit halfway. They just want to play out the entire trade, and that's fine if they are totally correct. But a lot of times, a lot of times as a trader, what we'll find out is that price doesn't move in one straight line. Like, look, price is always moving in some sort of zigzag, okay? And when it's doing that kind of zigzag and when it's retracing, it might just retrace to your stop loss. And you want to avoid that, right? You might end up being correct. Your general direction might be correct, but you might get stopped out early. So it's okay to get stopped out. You can't be right all the time, but what you want to know is that when you do get stopped out, you want to not lose anything. You want to have zero risk when you're being stopped out. Okay, so I hope you guys got that concept. Let me see. Yeah. Okay, so since there are a lot of like newer people here and older ones as well, I do see a lot of familiar names. After this 4-part series on trade management, I just want to find out if there are any topics particularly you guys want me to cover, like if there's a particular indicator or strategy or trading psychology, whatever it is, whatever topic is you guys want me to cover, that you guys can let me know, because I can try to cater the webinar topics to you guys, because ultimately, like I said, I just want you guys to be profitable. I want you guys to grow your account. That's my aim here. Are you willing to do a webinar on your reversal strategy? Yep. I am doing a webinar on my reversal strategy on, let me see, Thursday. No, Thursday, Kaylin is taking you guys. Probably, okay, next Thursday. So on the 17th, I will be taking you guys for some live analysis. When I'm doing live analysis, that's when I apply my strategy, and my strategy is a lot about catching reversals. Okay, catching reversals, and you will see how with my strategies, you'll be able to catch a lot of good risk to reward trade. Okay, so on the 17th, I'll be taking you guys for live analysis. I think the next time I see you guys is, yeah, it's gonna be next Tuesday. On the 10th, Kaylin will be taking you guys. On the 14th, Kaylin will be taking you guys. I'll see you guys on the 15th and on the 17th. 15 will be topical, which will be the part 3 of the trade management series that you guys are doing now. This is part 2. So today is part 2. Part 3 will be something else. I think it was idea invalidation, right? Remember I was saying the beginning of the webinar what part 3 will be. Okay, so on the 15th, I'll be doing part 3 of this trade management series with you guys. And on the 17th, we'll be doing live analysis. Live analysis is when we look for setups, and you guys can decide for yourself if you want to take the trade. I mean, if you do take the trade, please practice risk management and take the trade at your own risk. Okay. Okay. I've got a question asking how do I do support and resistance. I'm running out of time, but do you guys want me to do a refresher on support and resistance? I do see a lot of new names here. For those who have been here for a while, are you okay if I do a refresher on support and resistance? I have to say support and resistance is my bread and butter. Without support and resistance, I will not be able to find the reversals in the first place, because it's all the support and resistance area is where I find the entry for the sell or the buy. So I think that will be a good topic. So if you guys are good after this 4 parts, oh, sorry, my alarm is telling me that I'm running out of time. Okay, after this 4-part series on trade management, we can do support and resistance. Is everyone good with that? Can I get some response in the chat box so I know if you guys are good with that? Okay, cool. Thank you, Jacob. Thank you, Rich. Thank you, Jessica, Joash, Annie. Thank you, Tony. Okay, we'll do support and resistance after this 4-part series. Today is the second part of the 4-part series. So that will be next week. 3 weeks from now, we'll do support and resistance. So, okay. Thanks, guys, for attending my webinar. I hope to see you guys next Tuesday. Yeah, next Tuesday will be part 3. of the topical. And yeah, please, I look forward to having this journey with you guys, and hopefully I wish you guys can tell me that from my webinars you guys managed to grow your account or like find profitable trades. That's my only aim here, to help you guys be profitable in trading. So yeah, I'll see you guys next Tuesday. Yeah, take care, stay safe. Yeah, do stay safe. There's a lot of things going around in the world. Thank you, Eugene. I really appreciate it. Thank you, Rich. Okay. Thank you, Jacob. Thank you, Genya. I don't know if I'm pronouncing your name right. Thank you, Nikita. Okay, I'll see you guys next week. Okay, bye. Bye, guys.